Hello guys, welcome back to my YouTube channel. This is where I document my trading journey, the wins, the losses, and most importantly, the lessons. If you are new here, my name is Malebanye Mohale. I am a full-time Forex trader from the Mountain Kingdom of Lesotho. Ke Mosotho, ke Lejanja, ke Lejapere. I know I haven't been consistently posting my trades on this channel. This is due to the fact that the 5K GFT account which I was trading was breached due to daily drawdown. I breached the account due to daily drawdown because I was over trading and I was revenge trading. These are some of the reasons why I opened this YouTube channel. So let me not waste any time and dive right into the trades that I took last week. Down go. So guys, this is my trading journal on Notion. These are all the trades I've taken so far on the 15K GFT account. Few losses and a few wins and a few break-even trades. So let's do a recap on the following trades. The first trade I took on the account was a gold buy. I took a buy because on the 4-hour time frame, we had just changed character or shifted structure on the 4 hour. So I was anticipating the market to excuse me, to come to my point of interest, which is the red line on the Fibonacci retracement. So on the 1 hour, as we were approaching the area of interest, we had a liquidity sweep, a market structure shift, an internal market structure shift, internal break of structure, another internal break of structure on the 1 hour. And it doesn't look like a break of structure, but it is a break of structure on the 1 hour. But before this break of structure, we had a market structure shift. Then in fact, this could be an internal market structure shift again, because after this BOS, we had an internal market structure shift to the downside, but we also broke structure to the upside. So this was an internal market structure shift to the upside. Remember, my point of interest for the short position on the 4 hour was going to be here, targeting the most recent low. So although we were above 50% on the retracement move to the upside, I shouldn't have taken this position. But after this internal market structure shift, I thought maybe we were still going to mitigate the point of interest. So this is why I took a buy position on the internal structure, and after setting my buy limit, the market wicked me out, and we took our first loss on the account. This was an A+ setup. We had liquidity, we had a market structure shift. There was still a chance that the market could take us in, maybe, and come to my point of interest, then go short. So this was an A+ setup. It just didn't work in my favor. The probability wasn't in my favor, but I would take this setup again if it presents itself. The second trade we took on the account was the Bitcoin BTC USD short position. This was the analysis. Yes, it was on the 15 minutes. Let's see. Yes, on the 15 minutes we had this internal market structure shift to the downside. Then we retraced. I wasn't in the market, but I could have also taken this short position, this short Bitcoin position. My stop loss just on here, but I wasn't looking at the charts, and this played out perfectly and it hit TP. But the one that I took, the second trade, which was a loss, after this market structure shift, we came down, we retraced, we broke structure to the down. Let me just delete this. We broke structure to the downside. After this break of structure, I was on the 15 minutes. Then on the 15 minutes, I saw this internal structure. Let me see. Oh yes, this was another internal market structure shift on the 15 minutes. This was another internal market structure shift on 15 minutes, and then a BOS still on the 15 minutes time frame. Let's do this BOS, internal BOS, internal break of structure on the 15 minutes. So in my mind, I was like, maybe we are not going to go to the 1 hour structure. Maybe we are going to respect this internal 15 minute structure. So I took a short position, but I think I was risking 0.6% of the account. But this was the analysis. Still I risked 0.6% of the account because chances were high that we were still going to come to this level. So I took this small entry in case we don't come to this 1 hour area of interest. So I took a short, which was a loss. This was the second loss on the account, but immediately after losing this 15, immediately after the market violated this 15 minutes structure, this was now time to, this was just an inducement for those of you who know smart money concepts. So on the 1 hour, I took another sell position. Which was the third trade on the account, and I risked 1% of the account. We got tagged in and went straight to TP. I think it just took less than 24 hours. Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21 to 22 hours. This is how long the setup took, and we hit our first TP on the account. The third or fourth trade which we took was the German 40, which was a break-even trade. Remember, I just talked about the Bitcoin position which hit TP. The this is the next trade we took was the German 40 position. This was on the 4-hour time frame. On the 4-hour time frame, German 40 has been bullish, continuously breaking structure to the upside. I've been missing a few opportunities, but this is the one I took. I think it was late at night. Let me see. It was in the evening, at 5, sorry. So after this 4-hour break of structure to the upside, I took my fib tool. Then the market came to my point of interest. So I saw this opportunity when the market was right around here, after mitigating our point of interest or point of entry. But I was like, this is still a good risk to reward ratio, 1:2.7. So I was like, right, let me just take it. I normally take 1:3 and above, but I was like, let me just take this, still near my point of interest. So I manually executed this. It went straight into profit, but because it was on Thursday and I knew that we might reverse or consolidate around this area. So when the market was somewhere around here, or when the market was here, I locked my profits below this low. This is where I put my SL, my stop loss, somewhere below this low. When the market triggered my SL, went down, but the overall analysis was not violated as the SL was not hit. So the market came down and it continued to go in the direction of the, sorry, I'm a bit distracted. The market continued to go up. So this was a break-even trade because I think we were $50 into profits where the SL was locked. So we only managed to make $50. I then took this German 40 short position, which was also a loss. Lost $49. Shouldn't even taken this position. I don't know why I took it. I was also anticipating a reversal on German 40. Don't even know why I was anticipating a reversal, but this was a bad setup. And my thought process was like, this is an internal break of structure to the upside. Mind you, I'm trading on the 5 minutes time frame. This was just a bad setup. This was an internal break of structure to the upside. This was an internal market structure shift. Don't even know why I was on the 5 minutes, to be honest, but so after the internal market structure to the downside on 5 minutes time frame, I saw this fair value gap. This is a fair value gap, a 5 minutes fair value gap. Let me change the color quick. Yes, this is the 5 minutes fair value gap, and this is the 5 minute order block. So I think I entered on the fair value gap. Yes, the fair value gap. I entered somewhere around these weeks, somewhere here, and my stop loss was just above the high, targeting. Oh, but fortunately enough, I risked only. I think I was targeting these lows right here. I don't even know why I thought Gemini 30 was going to reverse, if you ask me. But this was the thought process behind the Gemini 40 trade, which was a loss. We hit our SL the next day, I think, but we were in profit, -1.5, which is not that much, but because the SL was here, 1:1.6. But this is the analysis behind the Gemini 40 short position, which was a loss. The next trade we took on the account was the Euro USD long position, which was a loss, and we lost $280. This was the worst day of trading on the account. Let me show you why. So Euro USD has been bearish for quite some time now. So I was anticipating a minor retracement to the upside. So on the 15 minutes time frame, this was the last break of structure to the downside. This was the last break of structure to the downside, and this was the swing high that resulted into this swing low. So on the 15 minutes time frame, we had a internal market structure shift to the upside. I wasn't even thinking the retracement. I wasn't even hoping that the retracement would go far. I was just hoping it comes to this 15 minutes fair value gap. This is the 15 minutes fair value gap, which is not mitigated. So after this internal market structure shift to the upside, I thought maybe, or I also realized that internally we also had an internal market structure shift. This was the internal market structure shift, internal break of structure, another internal break of structure. And after this internal break of structure, I could have taken I think it was the previous day, could have taken a long position here, but I was like, let's break structure to the upside first, then let's change character to the upside first, then maybe I can consider taking a long position to maybe to this fair value gap. So I didn't take this one, which played out. I didn't take it. It was an internal trade, and the market character hadn't changed yet. So I was like, let me wait for a confirmation first. Then after this internal market structure shift, the blue line, I was like, maybe it's time now. We are starting to be a little bit bullish. So this was the fair value gap. This was the order block. So I took my fib tool, placed my buy limit on the red line. Then we got tapped in, and the market, I think we were, you see, 1 1:1.4% profit. I entered with how many trades? I entered with 2 trades here on the let me see. Oh yes, I entered with 2 trades, and this was we went into profit of 1:1.4%, of 1:1.4%, but then ended up hitting our stop loss. So after this stop loss, I was like, oh, maybe, because this is the original swing low, maybe the market is respecting the external structures, not the internal structure. So I put another buy limit here. 2 trades again, don't even know why, if you ask me. 2 trades, another buy. It still went into small yana profits. Let me see, 0.66%, small yana profits. Then hit our SL. Then I was like, I'm done trading for the day, and I lost $288 on this one setup or one pair. And this was, not only was this a bad trade, it was also poor risk management, poor psychology, poor everything. Everything behind this trade was just poor. Don't even know why I took this trade, as this pair was very, very, very bullish. I was just hoping it would just retrace maybe to this fair value gap, and I was trying to capitalize on the retracement move and try to pass. The reason why I was taking 2 trades, I think I was trying to pass the challenge, the phase 1 challenge with this setup, so didn't work out. After the $288 loss, we took a US30 short position, which was a break-even trade. We made $84. This was the analysis behind the trade. You know me, and anticipating reversals. This is another reversal anticipation trade. It's similar to the German 40 setup, internal breakout structure. This was an internal breakout structure, 5 minutes internal breakout structure. I never take trades on the 5 minutes time frame. Don't know why. I was looking at the 5 minutes, but this was the internal breakout structure to the upside. Then we had an internal market structure shift to the downside, which is valid. The analysis is valid. The issue is the time frame, and we had this liquidity area, the fair value gap. This is the fair value gap, 5 minutes fair value gap, 5 minutes. I don't have, let me just say, it's a fair value gap, not an order block. Let me just do this, leave it as is, and this is the 5 minute order block. Yes, let's do this there. This is the 5 minutes order block. So on this setup, I entered on the order block because when I saw it, we had already mitigated the fair value gap of this week. 50% of the fair value gap was mitigated, and then the market was still going up. So I was like, okay, maybe we are coming to the order block. So I put my buy limit here, got tapped in. My stop loss was just above this high. Also targeting, let me see, the RR was crazy for this trade. 1:17. Yes, the RR was crazy. So after we got tapped in, the market came down, went back up close to our stop loss, but didn't hit our stop loss, continued going down. Then I realized that this setup is not going to play out. I reanalyzed it, then I realized that nah, this is not going to play out. So I think when the trade was somewhere around somewhere here, I closed it manually. I was risking $40 on this setup, so we made I think somewhere around here we made 84. Let me see, what is it? We made $84. 40 times 2.19, somewhere around here. I closed it manually. So this was, although it is a 1:2, this was just a break-even trade. I was risking $40 because I was anticipating a reversal, and I was my target. This was a 17-hour trade. This is why I was risking $40. So if it had played out, it would have given me a good profit, I think. Yeah. So forgive me. So immediately after not immediately, the next day, after 2 days, on the 20th, we had a German 40 long position. TP hit, we made $509, 3.4% of the account. This is actually not a 3.4%. I think it is a 1:4 or 1:3.8 or 9. It's 3.4 because of the overall equity on the account, because I was already profitable, or I had a little bit of profit, so I was above the initial starting balance. This is why this is a 3.4, but this is the analysis. German 40. This is the analysis. So after taking this loss, I realized that initially on the 4 hours, I was initially bullish on this pair. So I don't know why I took a short position here. So I realized that this pair is still bullish. Let me just delete this quickly. So we had this break of structure, internal break of structure to the upside. This was our most recent low. The market came, we put our buy limit on our area of interest. Then the market came. Fortunately enough, I never set my stop loss right on the on the fib line, on the 100% line. If I had set it, I would have been tagged out as the market came straight, touched the 100% fib line. But fortunately enough, I always leave room for a few pips below the line for weeks, or yes, for weeks. I always leave just a few pips. So this SL was not triggered. The market tagged us in and came close to our SL, but it didn't trigger us, and then it went straight to TP. So this was a nice $500 setup. I would have also targeted the high time frame, because I'm now on the 15 minutes, the 4-hour target, and this would have been a 7% trade, but I was just like, let me not be greedy, let me follow my edge, because my edge, one of my rules is that I always target the next swing high or low, external swing high or low. So I was just like, let me not be greedy, let me follow my rules. So we hit TP, we made $500. Then lastly, we had a USD chef, which was a short. It was also a win. We made $460 on the account. USD chef. This is the trade, the USD chef trade. Let me go to the 4 hours and show you the overall analysis. So on the 4 hours, let me see. Okay, yes, on the 4 hours we had this break of structure to the downside, another break of structure to the downside, then we retraced to the point of interest. After retracing to the point of interest, we had this market structure shift to the downside. We retraced, respected this high because it wasn't taken out. Market broke structure again to the downside. So this is the trade, the analysis. So let me go to the 1 hour time frame. So on the 1 hour time frame, the market was in my area of interest, above on this straight line, and between these two lines. Let me just say between these two lines. As long as the market is between these two lines, this is my area of interest. The trade is still valid. So the market was going up, and I thought that maybe we are just going to sweep liquidity just above this high. Liquidity sweep just above this high. Let me remove this thing. I'll talk about them when I get. Let me just remove them. So I set my buy limit, so my sell limit, right above this high, and we swapped liquidity above this high, got tagged in, zero drawdown, went straight into profit, and then we created this internal market structure shift. I was just like, this is an opportunity for a re-entry on the, but because we were still close to the initial intro, to the close to the first trade, I was like, let me just not take this one, because we might still go up and sweep liquidity above this second high, and this trade if we swap liquidity above, this was going to be a losing trade. So I was just like, let me not take this one. But had I taken it, this would have been a nice TP hit trade. As you can see, it tucked us in, went close to our stop loss but did not trigger it. So this was a nice re-entry opportunity, but I didn't take it. So went into profit, went back up to retrace, and we came to this order block. We came to this 1 hour order block. This was the 1 hour order block. We tagged it after after mitigating the 1 hour order block. We went straight down. So yesterday, which was Friday, I had to close this trade manually, as it was Friday. So I closed it somewhere around here. I closed it manually. I didn't want to hold this trade over the weekend, as we know that these markets, these weekend gaps, you can breach your account or blow. If you are trading personal funding, you can blow your account. So I closed it manually to avoid weekend gaps. But if let's see, this was a nice 1:3.6. It was still a nice RR. We made $460. The overall target is here, which is a 1:7. It's a 1:7. Normally my trades are 1:3.6. It's 1:7 because I didn't enter right on the red line, which is the point of entry. I waited for the market to go a little bit into the area of interest, then I entered. So this is a nice 1:7. So next week on Monday, if I get an opportunity for a re-entry, let me delete this and give some of you guys a small nyana signal. This is not a trading advice, but I'm giving you a small nyana signal. This is the fair value gap, which is not mitigated. We just broke structure internal. Let me do this. Let me remove this because it's in my way now. And this because we had an internal. We just had an internal market, internal break of structure. You see this low liquidity swap is violated. This low is not respected. This is a liquidity sweep, and I'm sure on a much lower time frame could be an internal. Let me see, 5 minutes. Okay, no, it's not an internal market structure shift, but because I'm bearish on this setup, ran out of storage, so I had to delete a few things, and this cut us, as I was explaining, the next trading opportunity for the following week. As I was saying, because on the 4-hour time frame we are bullish, and we just got tapped in on the point of interest. So and we had this liquidity sweep on the 1 hour. This low was not respected. We swapped liquidity below it. This is a sign of weakness. Next week we might come to this fair value gap. We might come to this fair value gap, respect it, break the structure, which would be the first internal market structure shift to the downside on a much larger time frame. I would wait for a retracement, then target the next high. Or maybe if we don't we come to this 1 hour, because I'm already bearish on this setup. So maybe if we come to this 1 hour point of interest, then I will reconsider re-entering, or maybe on the fair value gap. Still fine, still nice. Maybe the midpoint of the fair value gap. Yes, I could enter here. Let me see. 1:5, still nice. Let's see if we enter right on the 1:4. Still okay. RR could consider taking it. So this is not a financial advice. This is not a trading advice. This is just what I'm anticipating for the coming week on this pair, because I had to get out of it early because it was Friday. So I might consider re-entering somewhere around this area and go down with it again. Yes, thank you. For those of you who would like to see my trading journal, this is my trading journal Notion. It's just a simple, this is the simple gallery review where you see like the overall performance of the trade to German 40 on the 20th. It was a long. This is the result. This is the profit I made or loss I made. This is the 15K account. And if you let me expand this view, I wanted to do this. Yes. This is how I journal my trades. It was a long outcome. It was a win. I risked 1%, made 3.4%. I didn't enter the current price, the stop loss price, and the TP price. It was on the 15 minutes time frame. My confidence level was high. Count size 15K. Date emotions before. I was calm. PNL this. Then we come entry criteria, 15 minutes time frame alignments, 15 minutes break of structure, the fib level 78.6 level respected or mitigated. This is the this should be the screenshot before, but I didn't take the screenshot before. I took it after. Apologies. Screenshot before, screenshot after the trade has played out. This I should add emotions you on the trade. Ever lessons learned. This was an A+ setup. My SR was a few pips below with 100% level, so it was not triggered. Full TP hit. I could have made more by targeting the high time frame level, but I was not ready to hold that many days. So this is where I journal my emotions and the lessons I learned after each trade has played out. But this is a simple trading journal for those of you who would like to maybe copy it and make something similar to this for yourself. Then we have the calendar view. On the calendar view, it's just it's similar to the gallery view, just that shows now how much did I make, how much did I lose. This was the 12, 1, 2, 3, 4 trades on the 12th, the 18th, 1, 2, 3 trades. This was where it was just the poor I took a bad trade and poor risk management, and I lost 288. And this is the on the 20th I had 2 winning trades. So this was the best day. So it's different. The calendar view is different from the calendar view, because on the calendar view it shows the date when the trade was taken, but on the I think here it shows the date when the trade was closed. Oh no, it's still the date, or the date when the trade was taken. So it's similar. Or it's different on the MetaTrader app, because on the MetaTrader app it shows the date when the trade was closed, not when it was taken. So yeah, that's the only difference between this journal and MetaTrader history. Yes, so this is my journal. I also have a table view, still the same thing, but just in a table form. So this is my journal for those of you who would like to copy it.